Welcome back. It's time now to take a look at the top business stories. Oil company Total eases UAE fuel shortage. MAF Holding looking at up to $4 billion bond issuance. And Chinese inflation in May accelerates 5.5%. Let's look at the UAE stock markets first. Both the DFM and ADX edged higher today. The DFM financial market rose 0.7% to close at 1,567 points. Best performer was Arab Insurance Group again. The shares rallied 11.1% today. Arab Tech was up 1.5%, EMA Properties 0.7%, and National Cement Company 8.5%. Among the top losers was Dubai Islamic Insurance with a minus of 2.7%. Volumes picked up today. 94 million shares were traded, valued at 102 million dirhams. And over in the capital, the ADX rose only slightly by 0.1% to close at 2,711 points. The energy sector was up the most, with Dana Gas adding 1.6% and TAQA rising 2.4%. Among the top losers was National Bank of Al Quwain after its shares fell 9.1% today, followed by Gulf Medical Projects Company, which fell 5%, and Gulf Cement Company, which dropped 2.5%. 47 million shares were traded, valued at 77 million dirhams. And let's now look at the GCC equity markets. The country's main benchmarks ended mainly higher today. We had news out this week that Dubai is set to issue $5 billion worth of bonds as yields are currently favorably low. To talk about this issue further, we're now joined by Tim Fox, Head of Research and Chief Economist at Emirates MBD. Welcome, Tim.
Thank you.
So, the government is ready to tap the bond market. What does that say about the progress of the economy?
Well, I think it certainly says that confidence is coming back, growth, recovery is improving, and interest rates, as we can all see, are falling. Market interest rates are declining. All of that creates the conditions, I think, in which companies have been raising money, raising finance through the bond markets. Recently, we saw Emirates Airlines last week, and now the government of Dubai seeing a window of opportunity to do the same. And I think it probably shows that sentiment and confidence is starting to go hand in hand with recovery in economic growth.
Speaking of stimulus and good sentiment, now at the end of the month in the US, the QE2 program, the bond purchasing program by the Federal Reserve, will end. Do you believe there'll be a third quantitative easing round? And if not, what would that mean for commodity prices?
Well, as you said, QE2 is probably going to roll off at the end of June. We doubt whether there will be a further renewal of quantitative easing. We think that the economy, which has slowed down slightly over the last month, will recover in the second half of 2011. And as that happens, the extraordinary stimulus in the United States will gradually get taken away. That doesn't mean an interest rate rise anytime soon, but probably in 2012 you will start to see interest rates start to move up in the United States. Commodity prices, to some extent, commodity prices have been rising partly due to speculation. And as interest rates in the United States go up, gradually that speculation will start to unwind. And it could mean down the road that commodity prices start to lose some of their higher levels. That probably won't happen just yet, but I think it's something to watch in 2012.
Thanks for coming in today, Tim. Great. See you in 2 weeks. And now to our top stories. UAE fuel retailer Emirates is said to buy an extra 100,000 tons of gasoline from French oil company Total, according to Reuters. Total will be paid a $9 premium to the average monthly Brent price, as traders said. An official source at Emirates confirmed it is purchasing petrol from different markets. This comes after petrol stations in Sharjah and the Northern Emirates have experienced fuel shortages this month. Meanwhile, petrol prices in the UAE will not change, an oil industry source told news agency Xavier. The UAE government will continue subsidizing prices as before. Dubai's Maïd Al Futtaim Holding, franchisee of hypermarket chain Carrefour, plans to set up a medium-term bond program potentially worth up to $4 billion, sources told Reuters. The company, which develops and manages shopping malls, hotels and communities across the Gulf, is establishing a bond issuance within the next 5 days that will be somewhere between $2 and $4 billion, said one of the sources. They will then consider when to launch the bond, depending on when the Dubai government comes out with its bond sale, which is speculated to be the size of $5 billion. Maid Al Futtaim will use the proceeds of the bond sale to spend around $3.5 billion on 4 new malls. And in our fast financial news, Nakheel officials have confirmed that the Dubai government will fund a sizable amount of the delayed $10 billion Jumeirah Golf Estates project. According to a local paper, the building company said that construction work has continued after it was suspended in 2009. Jumeirah Golf Estates will see over 306 homes scheduled for delivery next year. The UAE Federal Electricity and Water Authority has signed a contract with US company Aquatech to build a desalination plant worth $82 million. The facility will provide drinking water for Ras Al Khaimah and is scheduled to start production by 2013. And after the break, we will run you through what's making the headlines in international business today.